Okay, so in our practice problem for Chapter 11, we are looking at problem 11-6. This is on page 633. Hopefully you made an attempt on this, and now you're reviewing to see how well you did with the information. So on March 31st, 2018, the Herzog Company purchased a factory completed with machinery and equipment. The allocation of the total purchase price of $1 million has already been done. Land, 100,000 of it. Building, 500,000 of the purchase price is allocated to the building. Machinery, 240,000 of it, and the equipment, 160,000. So we purchased various assets, and the allocation has already been done. Then any kind of estimated residual value is listed for each asset, and then the estimated useful life. It goes on to say on June 29, 2019, so the next year, machinery included in the March 31st, 2018 purchase that cost $100,000 was sold for $80,000. Herzog uses the straight line depreciation method for buildings and machinery and the semi-years digits for equipment. Partial year depreciation is calculated based on the number of months an asset is in service. So we must compute depreciation expense on the building, the machinery, and the equipment for 2018 in Part 1. So land, you do not calculate any type of depreciation. The building does not have a residual value, and it has a 25-year life, and the company uses straight line. So 500,000 is the cost minus 0 residual or salvage value divided by 25 years will give you an annual depreciation amount of 20,000. However, the company did not use this building the entire year. They started using it April 1st. So they will only calculate 9/12 depreciation expense, or 9 months of the 12-month year, for purposes of depreciation expense in this first year. So you can see there, 15,000 is our result. The machinery has a 10% of cost residual value, 8-year life, and it uses straight line. So we'll take $240,000 cost minus 10% of $240,000, or $24,000 as the residual value, divided by the 8-year life will give us depreciation expense of $27,000 a year. Just like with the building, we're only using the asset 9 of the 12 months of the year. We began using it April 1st. So the amount of depreciation expense, $20,250. The final asset we have to calculate depreciation on is the equipment. The equipment costs $160,000 and has a residual value of $13,000. It has an estimated useful life of 6 years. But the company uses some of the year's digits to calculate depreciation expense. And just to review and make sure you understand, and this is the way I approach some of the year's digits. First of all, we always take cost minus residual value. That will always be the amount you calculate your depreciation on, cost minus residual. You then multiply it by a fraction. The numerator is always the number of years or portion years, the amount of time, let's say it that way, that you need to calculate depreciation. So as of the beginning of this asset's life, 6 years of depreciation expense needed to be calculated. So that's why the numerator is 6. The denominator is the sum of each digit to get from 1 to 6. So the denominator is 1 plus 2 plus 3 plus 4 plus 5 plus 6. An easier way of doing that is taking the life of the asset times the life of the asset plus 1. So 6 times 7, or 42. Divide that result by 2. So it's always the life times the life plus 1 divided by 2, or 21. That denominator will remain constant throughout this entire calculation of depreciation expense on the equipment. The only thing that will change each year is the numerator. So 1 year's worth of depreciation, because that's what you're calculating here, is $42,000. We only need to calculate 9/12 for the first year, 31,500. So that is how you calculate depreciation using sum of the year's digits. In part 2, they want us to prepare the journal entries to record depreciation on the machinery sold June 29th, 2019. And then ultimately, how will we record the sale of the machinery on June 29, 2019? Now, if you saw in your reading, when you sell an asset that's being depreciated, you must make sure you have all depreciation recorded through the date of the sale. For this machinery, the depreciation that has been recorded has only been through December 31st, 2018. So the first thing we want to do is determine how much depreciation is on this machinery from January 1, 2019 through June 29th, 2019. So we'll take the $100,000 it cost, just that, because that's what we're selling. The machinery cost $100,000 that we're selling. We use the residual value would be 10% times 100,000, and then we divide that by the 8 years. Because we want to know, because it still has an 8-year life. So depreciation for the entire year would be $11,250 for that particular machine. We need to record depreciation expense for 6 of the 12 months because we only used it from January 1 through June 29th, or 56.25. So now we're going to be asking ourselves, now, where do we stand with this sale? When it comes to selling an asset, you must take the selling price of the asset, so I'm writing this down, minus the book value on the date of the sale. Remember, book value is the cost of the asset minus the accumulated depreciation to date. And that will tell you if you sold it for a gain. So if the selling price is more than the book value, you sold it for a gain. If the selling price is less than the book value, so your computation would result in a negative number, it's a loss. So we know how much this machinery cost. It's $100,000. They gave that to us. So, and we know how much we sold it for. We sold it for $80,000. And when we're calculating the book value, the cost is $100,000. But the next question is how much accumulated depreciation is there for this $100,000 machinery? Well, if you look to the calculation above, since it's straight line, we would have $11,250 of depreciation expense each year related to that equipment for 12 months. Well, last year we only recorded 9/12. So 9/12 of the $11,250 was the depreciation related to this machinery, or $84.38, recorded last year, currently sitting in an accumulated depreciation account. We calculated the depreciation just related to this machine for this year. So those two added together will give us our accumulated depreciation. So if we take cost minus the accumulated depreciation of $14,063, 3, 9, 5, 9, $85,937 is the book value. Well, we sold it for $80, book value is $85,937, so this resulted in a loss of $59.37. How would we record this in journal entry form? Debit cash, because that's what you're getting. You must credit the machinery for the cost. When we purchase the machinery, we debit it for its cost and we don't change it. So when we're selling it, we have to remove its cost out of the machinery account. We remove the portion of the accumulated depreciation related to this machine by debiting accumulated depreciation machinery for the $14,063. And then the loss is debited to loss on sale of machinery, which, if you remember, that will be reported on the income statement in the other revenue and expense area. Okay, so that's how that would be handled. The final requirement, requirement 3, wants us to calculate depreciation for 2019. Now, the building is still intact. We haven't sold any of the building, so it would be the 500,000 cost minus 0. The life hasn't changed, so it's still 25 years, $20,000. So once you calculate straight line depreciation on any asset, if estimates don't change or the cost, you don't sell any of it, it will be the same amount each year. And this year you will record the annual amount of $20,000. Machinery. Now the machinery is going to be calculated a little differently. Why? Because the cost changed. Going in to last year, we had 240,000. But remember, we sold 100,000 of the machinery. Well, the machinery that cost 100,000 was sold, and the depreciation related to that has already been recorded, so we don't have to do anything with that. So we'll take the $140,000 cost remaining. So the machineries that still cost us 140,000 are still here. We need to calculate depreciation on them for the whole year. So we'll minus the residual value, which is 10% of 140,000 or 14,000, and then divide that by the 8 years because that's still its life. So we don't decrease the life when this stuff happens. No, it's still an 8-year life. So machinery would be 15,750 depreciation for the year. You calculate it for the entire year. The equipment with some of the year's digits. The first approach is my approach that you see there. I just find it easier to teach it this way and actually to calculate it. Some of the year's digits, remember, is cost minus residual value. That doesn't change. Your denominator doesn't change from year to year to year. So once you calculate that 21, it remains the same. What does change is your numerator. And remember what I said you want to focus on. As of the beginning of this year, how much longer do we need to calculate depreciation expense? So you're asking yourselves, how much depreciation expense for what time period have we already recorded? Well, last year, we only recorded 3/4 of a year, or 0.75 of a year's depreciation expense. So if the life is 6 years and we've already recorded 0.75 years, we still have 5.25 years of depreciation to record. So when you look at it from that approach or that aspect, you might find it easier. I like doing it that way because you consistently apply that from year to year to year. You get 36,750. Your author's approach is a little different. And it's not that it's wrong, it's just different. They start with, of course, cost minus residual value. They multiply it by the 6/21 because you have only recorded part of year 6's depreciation expense, 9/12 of it. So your first calculation will have you calculate the depreciation that's related to this year, that it's really that year, that first year is still happening this year. So 3/12 of it, or 10,500. But that's only 3 months. So now your next calculation, cost minus residual, as of April 1st, the end of those first 3 months, you just calculated depreciation expense for how much time is remaining, 5 years of 5 years. So you put that in your numerator, divide by 21, but you only need to calculate for that amount 9/12. So you could see that to me becomes very confusing. In the end, you would add those two results together and get the same as the calculation that I got up in part 1. So it's really up to you what approach you want to take with some of the year's digits. I'm just giving you another option. Okay, so that is the conclusion of problem 11-6. If you have any kind of questions on any of the methods or the content of this chapter, please be sure to post it to the discussion board.